Welcome back. Continuing our conversation on the market, Shahzad Madon from TCG Asset Management is now joining in. Shahzad, good morning. Thank you for joining in. Compliments of the season to you and your team as well. I was looking at your holdings. We spoke about DB Corp the last time you were here. We also spoke about Intellect Design. Equitas Small Finance Bank is another one, right? It's among your top holdings. With a lot of these major mega deals that you have seen in the financial space, now, do you believe that these small finance banks also now are next in line to become the larger banks, as the way AU Small Finance Bank has now graduated to become a large one?
Sure. So firstly, good morning, Hormaz. Thank you for having me on your show. Wonderful to be here. And season's greetings to yourself, all your team, and all your viewers. So regarding Equitas Bank, our perspective on the stock is as follows. This is a very good quality bank. A lot of the book is secured. There was an element of the unsecured part, which was obviously under stress over the last, let us say, 15-ish months. To our mind, the worst appears to be behind in the MFI space in general, and in particular also for this bank. Consequently, our view at the current valuations, which are very reasonable relative to whatever else is available in the market, as well as to its own history, there is a good story. Things should go well. And, just again to remind that the MFI portion of this book is rather small at this point in time. The bulk of it is secured in terms of the NPAs, very, very much under control. So look forward to good growth going forward. I must mention here, what you mentioned, the way we're seeing it, we're not seeing it in terms of that there could be some potential corporate action. This is the way we see it is strictly from a perspective that this bank merits on a standalone basis a place in our portfolio.
All right, on a standalone basis. I just wanted to understand a little about, your investment in DB Corp, because newspapers, one wonders whether, that's a space to be in from a growth standpoint, with the digital areas not yet as sound in terms of cash flows, despite the growth coming in.
Well, hi, Mangalam. So let me touch upon this. The newspaper industry or the newsprint industry, firstly, the newsprint industry in general is a winner-take-all industry in the sense it's in a bit like a platform space. So when you look at DB Corp, they are dominant in certain geographies and in the Hindi heartland, also in Gujarat, Punjab, in addition to whatever is there. Threw up a lot of cash, so cash flow positive, strong cash flows, cash on the balance sheet, fairly good ROE. That's one part of the business. That part of the business continues. You've seen even over the last 5 years, which includes the COVID period, a very difficult period, you've got an earnings growth, which is low single digit. You have a high dividend yield of roughly 6%, but that's not the story. The story comes now. When you look at DB Corp, what's happening is they've invested very, very heavily in the digital space. They've got wonderful digital assets. I'm not sure how much you are aware of it, but that's one part of it which is going well. That's the job. It's all expensed through the P&L. But the very interesting thing is what's happening going forward. When you look at the, let's say the media industry, one of the things is, okay, let's put it this way. Let me change it. If you need any information, what you look for, you go to Google, you search for something. And you'd go and read a news article written by somebody else. Who gets the advertising dollars? As yet, it was the search engine. But things are changing. Even in India, at this point in time, search engines have to pay the content provider. You actually seen that happen. There is legislation in most countries, even in smaller countries like Indonesia, etc., where there is a lot of legislation on this front. That said, you're going to see even on one more front, on the AI front. Just recently, TPIIT put out a discussion paper where they're talking about that. What do AI models use? AI models use content from underlying agencies, including yourself. The agencies the content provider needs to be paid the compensation. So the way we see it is as this, and that's some part of the way we invest, is that we're looking at companies available at reasonable valuations with a reasonable growth outlook and an optionality. And in our view, what's priced in is exactly what you said. that the industry is growing nowhere. That's why the stock is available at the valuations it is, which is very, very cheap. And the way we see it is that there is potential upside on account of what's happening on the entire, call it the AI space, as well as what's happening, like the search engines have to provide the content providers compensation. So our sense makes good value, offers good value to us.
Shahzad, one of your higher allocations in your portfolio is auto and auto components. Now, where among it does your preference lie? Is it auto or is it auto components? Because I see SJS as part of your holdings, I see Carraro as part of your holdings, ZF Commercial. So your tilt is more towards the auto ancillary space. Now, does that mean that since the outlook for the industry is good, there are some reports about the CV cycle turning as well going into next year, does that keep you bullish on a lot of these auto ancillary names for going forward as well?
Hormaz, we are bullish on auto and auto ancillary. In this portfolio, specifically because every portfolio is managed to a certain mandate, we're looking for certain types of stocks, as the name suggests, the transformative growth type, which are typically some of the mid-ish cap companies where we believe have outsized growth potential. So there is the auto anks fit in. On all three of them, we do believe when you look at what they've delivered in the past, as well as what's the outlook for the future, right? For all three of them, we are, I would say, optimistic. We believe that they offer very good value. I just add, in some cases, like in ZFCV, you also have the upside of, again, regulatory tailwinds. You would be aware that there is, for commercial vehicles, right? You are over by FY 2027. You will have norms which mandate that you need to have greater amount of safety systems. Now, what that means is a higher amount of ticket size for ZFCV. In Carraro, another very good company which we've seen, the way we saw it is post IPO, which is a very recently listed IPO. Stock is corrected meaningfully. Valuations are very reasonable. Benefits significantly from the tractor upcycling, and more specifically in the tractors, it's in the heavy HP tractors where it makes transmission as well as the system. So makes a lot of sense to us. Both the stocks, SJS is of course doing very well in the in the aesthetic space, also expanding and being one of the let us say star performers over the last few years, and we expect these companies to do extremely well, and that's why they find a place in our portfolio.
All right, Shahzad, thank you so much for joining in and explaining the rationale for a whole host of companies on your portfolio, stocks and sectors to bet on. Wish you, your team, your investors and your family a very happy new year and season's greetings as well. Take a short break, come back, more on the markets on the other side.